All right, what's going on, guys? We're going to be going over the trade recaps that I took for um, October 17th. So we had an initial jobless claims today, and we had an NWOG over here to start off the week. This was Friday's close into Monday's open. So the little new week opening gap is what we call it, would be from down here to up here. Okay, and I did emphasize how we are leading into the window of weakness post October OCPEX that is this Friday. And after that, we do get 2 weeks of a window where things can definitely cool off, right? Um, so with that being said, we had an NWOG and then we had data today. The data marked us up into the top of the NWOG, this being the top of the NWOG or this week's opening print. So whenever you're looking at this from a perspective of risk to reward on the gap up, I was scaling into some roles. I was scaling into some tech profit rolls that looked really clean as far as long side goes. And those were the leaders that I've been talking about that we've been building out really clean, higher low by higher low, clean accumulations for relief into these imbalanced gaps. I had some PANW, if you guys watched a video that I put out a day or two ago. This was a really nice, basically high tight flag on the daily that led us to try and go test the all-time high. Obviously a really nice scale spot anywhere within this range up here. And that was just a few contracts, but my bigger position was CRWD, and it was just a simple retest whenever you're tying in the actual gap level and you're also tying in the previous swing high, and you get this 2-bar sell pattern on harmonic volume, meaning volume that is pushing on like lower volume push down from the bottom of a gap. So we do have to conclude that above that high, is it grabbing all of the liquidity that still sits and remains within this massive gap where there's going to be leftover orders, right? So we have to think the bottom end of this chart is favoring a relief reversion trade that recorrects itself back into these imbalances above us. So whenever you're getting the breakthrough resistances on really nice volume, followed by retracements into these bull gaps on declining volume, and then higher lows. Obviously, clean weekly prints across the board, right over top of this resistance, as we got a nice weekly print on the week of September 30th, and then the clean follow through and continuation. I'm just looking for a staircase higher, where we're going to then use obviously this area of these 2 weekly sessions as another good focal point for us to look for a retest, and then obviously a profit roll. This is exactly what I did into yesterday, which was right off of this spot over here, right off the opening print. I grabbed some CRWD and a little bit lower, and then I swung these into the next following day. On next week expiration, these hit a high of about plus 80%. I was taking scales into 60, 65, 70, 75%. So that was a really clean trade. Not really much to it. However, I am actively taking profits on my longs. Then we lead over into Marvel. Marvel almost hit the 85 target, and you guys can't really get too antsy to then look for the full fill of the gap, right? Because we're 30 cents away, so it's really giving yourself lower end of probability whenever you're looking for the full target to be reached, 30 to cents to like 60 cents, 80 cents higher, 80 cents higher by the time we got our opening print. It's a fantastic spot to start scaling, and then obviously this showed that it was not really a long based off of this morning session. So those were cut as well, and profit rolls as well as the original position. We rolled the profit on the retest over here of this weekly level at 78.30. So I'm just taking the clean charts and I'm just rolling profits on them and getting as much juice I can out of the squeeze, right? Because that's all that really matters in a market where there's not a ton of opportunity on the table. You really want to stick with where the clean charts have been. Obviously, Marvel has been something that I've been all over. It's been a really nice chart. Um, Roblox. Roblox is one where I took some ads on this yesterday. They closed a little bit green. And what this did was I was looking for this to then hold above the next following trading session off of this gap level, which ties into what would be Tuesday's trading session high. And we also kind of opened up where daily resistance was, right? So if you're taking closes from a daily perspective, we have a hard time closing daily candles above this area, 41.74. So when you go into your 15 or your hourly and you take a look at this from where we knifed right through the overnight gap and then really found no bounce, it's a great spot to start thinking about cutting. I only took half exposure on this because I wanted to leave a little bit of room to add, and I never got the signal of anywhere to really add on this as there was no buyer presence throughout the day. So that was a very easy loss, not really too much there. And then we go over into, what was another one? QQQ. So I took a short on QQQ and I'm actually holding this right now. I feel like we're in our point of last in the area of last point of supply before we get that window of weakness. So what I mean by that, guys, is we have obviously the new week opening gap. We had data that marked us up, and I figured that data is going to be redistributed into the end of the week just because of the fact of the context of the chart, right? We're basically sitting within a bear gap that's dating back to here, and we never got any clean structural breakthrough in retest, and we started to get the slippage beneath this gap actually on Tuesday, October 15th. And we also have favorable prints to the downside. But when you're looking at this from just the perspective of the gap, the top of the gap, and the 618, it comes out to be a really nice clean risk to reward long where you can risk 496 or 495.76 or just like the 618. And then you take a look from pre-market session swing high to the current trading session low, and this was just a really nice 15-minute hold on the 618 or of the 495 psych. I initially added some puts over here in the morning, and then we got the retracement back up a little bit higher, and I started to add this thing more up into that 495 area. So that was a trade that was relatively easy. Well, it's not done yet, but I feel like I do have decent risk to reward on this one, given the fact that we still had some room down into the overnight gap at 490.93, and if we start to lose this gap and push our ways lower, we have a big gap beneath us that needs to be filled, and a gap left behind leading into that window of weakness, like I said, that starts after this Friday, so into next week's trading session. As long as we could print some sort of inside bar tomorrow in OPEX, or we can maybe crack what would be the trading session low down at 488.28, that could be a great trailing to think about finding the break, finding the retest, finding the push lower into low 480s to mid 470s and eventually low 470s. I don't think I can catch all of that with the expiration that I do have. So I'm probably going to be actively taking profits if we sell tomorrow. And those closed green to end off the day. So other than that, whenever you're looking at a couple other charts in the market, I've been talking about Disney, how this was a bottom end accumulation. So catching any sort of retest off of where these gaps have been sitting and these resistances can be a really nice trade to then think about rolling for a retest up into 99.28. I don't have my hands on anything over here just yet. However, that was a really nice looking rest day that we got today. Obviously, the volume is starting to elevate and match the previous trading session, and we had a really nice strong tape actually yesterday for Disney, which was very notable. And we actually broke through the resistance. The volume kind of dried up off of that area. So a rest day above where we broke through from, which was a very critical level, is pretty important. If you want to take a look at your EMAs, they're kind of curling up off of what the low of day of where the previous trading sessions low was. And like I said, I mean, this is just I'll probably be keeping my eye on this one. If it wants to flag out a little bit for a couple more days, go ahead and do so. I don't really want to be taking a lot of longs into the window of weakness. And then the rest of the charts, guys, primarily just don't look that great unless you're taking smaller scalps intraday wise. It just feels like a lot of the market's sticking in this general area. So whenever I do hit a trade like Marvel, it's like I need to sit on those profits and then roll the charts that I've been winning on, and those charts have been CRWD, PNW, um, even Marvel. Whenever we were able to get the retest over here, right, and you're catching nice moves where your risk is down here with your reward being all the way up into potentially 84, 85 bucks, and it's like $1 of risk with upside reward of like $6, right? So that was a really nice roll over there. Um, Aside from that, there wasn't really anything else that really caught my attention as of lately. Um, I would like to see kind of how the um, what's it called, Nike chart plays out off of where we're getting potentially our secondary high or low within this accumulation. It seems like we've already absorbed the range of where the earnings candle actually was, which was right over here. And then we obviously got that Bill Ackman stake news the next following uh, trading session as we broke through the earnings candle high. And then that led us obviously to higher low, followed by another news candle of a new CEO. And now we have marked down on lower volume than what the news gap actually was. So this is a pretty clean chart. It feels like something similar to CRWD and like INTC. We were getting these weird where you're getting these weird accumulations that are all stemming from almost like a reversion trade of being so overextended. If you take a look at the CRWD weekly, it's actually something similar. So I feel like people are finding value in some of these. Lulu was another one that I actually did want to take. However, I couldn't get my ads over here on any of these days, and retesting into this weekly level at 295.28 was definitely a little sketchy for me. So never really got to take that, and as you guys can see, we actually sold off of that area. Um, and then SMCI. I bought some calls into the close just off of how nice that dip was, and it felt like we were getting a really diminishing daily candle spread for 1, 2, 3, 4, 5, 6, 7 days trading sessions off of the earnings candle high. Well, that's actually not an earnings candle, but it's a footprint candle. It's a big signal candle for the chart, and as well as this previous swing low. So I was basically looking if it could hold the earnings candle area the next following day, and fortunately enough, we got a nice gap up, and then the big sell right off of the open is what took my trade back into break even. So there wasn't really anything there. Um, Obviously, we had some choppy price action overall as of today, and then we also had some tech names that were swiping out those previous all-time highs, like Nvidia, Apple 2 days ago. And then the rest of the charts don't necessarily look that great as of right now, leading into, like I said, that window of weakness. So if we could find some last point of supply areas in a lot of these charts, I think that they're going to be really clean focal points for shorts soon. And then obviously we reevaluate after all those stops are taken out into the holiday time of a rally that would happen. So that's kind of just what I'm doing right now. Everything's, like I said, it's going to be pretty quiet. Um, and as far as a scan goes for tomorrow, I mean, I have my position ready that um, I feel like has really good risk to reward behind it. And then the other charts just really haven't been there. The other sectors, none of them have really been there yet. Got a really nice day over here on CVX, and this has been a really nice weekly chart. If you look at this from just a change of character perspective, after we had a fake breakdown beneath a previous support on the weekly. And as you guys can see, this is a big time weekly support that has basically been there all the way since September of 2022. So when you're getting the fake breakdown, that leads to obviously a failure of that level with preliminary accumulation initially testing that level with a weekly hammer candle, then these can really pan out to be really nice trades. And you go into the 15 minute, and this looks really healthy. We got a nice leg up, followed by a lot of consolidation that led to then just a really nice strong close. I feel like I will be watching this chart. We do have a big time gap that is actually going to be closed up here at 151.80. And then obviously if we can control that gap, we have a lot of room to then move our way higher. And the reasoning as to why I say that is that this consolidation does not have a big seller within the range. If you're taking a look at the volume, yes, we have a lot of gaps. This was the initial gap. It then closed, and then we got another gap down. If they fail to hold these gaps, I could obviously see a seller playing passively that sits up through the 155 range and maybe even a little bit higher. So I am going to be interested in CVX. I feel like on the daily chart, this is going to be a little bit more of a change of hands, given the fact that, like I said, we got the fake breakdown on the weekly with preliminary accumulation and this bear flag look that then led to a move higher, a pushback lower on top of the reclaimed support that we had the fake breakdown beneath, and now we are moving our way higher and then potentially taking out this previous resistance, now holding it as a support that was initially established off of this earnings gap from over here. So aside from that, there really hasn't been anything that has been really too much on my focus. It seems like a lot of these charts are really dry, like they're drying out, and I feel like it's basically just going to be a waiting game and a survival game up until um, we get a little bit more into that holiday area, right? So yeah, I mean, there's just been a couple really nice charts that have been playing out on the crypto. I'm not a big fan of that. And then you take a look at some of these other sectors that have been extremely quiet, that have been making really nice moves, like airliners and just the whole travel sector. Obviously, financials have just went through their earnings reports, so there's not too much opportunity over there. So yeah, we will see how these play out. My only focus as of right now is going to be CVX. Um, Obviously, if the Netflix can remain relatively flat, I think this is still distribution. We did get a markup in after hours off of the earnings report. However, like I said, if this can maybe pull back and stay within that implied move, I could think about taking another position over here. And yeah, that would be it. I mean, it's a very short video. There really hasn't been any big outperformer or anything to catch in the market. Obviously, some names that look decent, but nothing too crazy. I would say Lyft would be the only other one that's really on my radar. I'm not a big fan of trading this one, but the big volume pop followed by the dried up volume in these 4 inside bars can be really nice for a move that starts really going over like 1380, like 1375. And then obviously that would result in likely a move up into like near $15. So, even stuff like that's not really like something I'm too worried about. Um, I feel like I already caught all the outperformers, so at this point it's just a waiting game and resetting until, like I said, we get that clear rotation. So, yep, that'd be it.